and how they've retooled to outlast the pandemic. Kevin McVearry, our first speaker. Hi. Kevin has spent the last 15 years opening and operating numerous restaurants, bars, and nightclubs around the country, including the last 11 years in LA with his strategic vision, leadership ability, and operational expertise, he has positioned himself as one of the most effective operators in the industry. Kevin offers a wealth of knowledge in all aspects of restaurant, bar, nightclub management, operations, and profitability controls. Some of the areas that he consults with Small Business Development Administration, SBDC, with clients include customer outreach and retention, staffing requirements, venue design, review, marketing, to name a few, which are very important factors in consideration for our current times. Our second speaker, Dr. Eric Zacherson. Hi. After 25 years as a restaurateur and manager, Dr. Eric Zacherson returned to school to get his MBA and his PhD in organizational communication. His research focuses on leadership, team dynamics, organizational relationships, and coordination. He has been teaching, training, and consulting in Santa Barbara and Ventura for the last 5 years, with a heavy focus on team building, leadership, and strategy. Throughout all of these pursuits, a common thread has been the power of managing relationships positively. His published research indicates that workplace relationships are at the core of coordinated teams and organizations, and his work embraces the understanding that we have diverse ways of interacting and empowering people to manage those differences to be more successful. A little bit of a house cleaning before we get started. So the intention of our PowerLunch is to provide broad industry updates and share industry expertise from our speakers, but also cover specific business questions from the audience to make the conversation relevant and impactful. So the format of our discussion today, we'll start with industry updates from our speakers, address questions and topics that concern the broader restaurant industry, and then go to our audience and ask for specific business related questions. So in our audience today, I know we had a little bit of technical difficulty in the beginning, but we understand in our audience today, we have local restaurateurs, cities and chamber officials represented that are heavily represented, that invest heavily in restaurants. So please think of questions to ask and submit your questions in the chat box. And Paul Thomas, our Director of Marketing and Communications, who's also our technical support today, will line up the questions and meet you to ask your question. So don't be shy, because we might call on you to get your input. So we are very excited to learn more about this important topic and how that's affecting the restaurant industry, as well as the audience engagement today. So without further ado, let's get into it. So the pandemic has been devastating and disruptive to the restaurant industry, as Bill had mentioned. Not only to people's livelihoods and their businesses, many restaurants have been closed and yet to reopen, while others have been creative and pivoting their business model to cater to the shelter in home experience for the customers. Not to mention the impact it's had on the work staff. Kevin and Eric, could you please give us an industry updates on restaurants? And it could be at the national level as well as the regional, the LA level, on how they've fared during the pandemic crisis. And if possible, can you highlight examples of, restaurant is a huge industry. Examples of fine dining, fast casual, quick service, if you have anything unique to those segments, as well as national chains, as well as standalone independent restaurants in your update. Thank you.
Kevin, I think you're closer to the pulse on some of that. Do you want to go ahead and start and I can fill in?
Sure. Obviously everybody was taken for a loop back in March when this all took off. I as an advisor for the SBDC, the SBA asked us to come in and help field all those calls about PPP and idles. So I spent hours a day talking to operators on the phone who were losing their livelihood. And it was obviously taxing on me, but I couldn't imagine being there for them. So, we've kind of come to the realization that, hey, this is where we're at. We saw a little bit of a downtick in what's going on as far as cases and stuff. We're coming back into an upswing. I'm actually in Illinois now. I moved here a couple of years ago. I was there in Los Angeles for 18 years. But so I work with clients both in California and here in Illinois. So here in Illinois, we've just gone back to shutting down dining rooms. Everybody's got a 3-week stay at home unless you're going to work or the doctor or the grocery store order from the governor. And I know there you guys are operating on restricted dining room seating. So, what I'm working with on my clients, is getting lean as quickly as possible. The restaurant business has always been a nickel and dime game. So if you're profiting 5 or 10%, you're doing well. So when everybody got hit by a loop for this, it's like, okay, well, now we're shut down. We're not operating. How are we going to work our way through this? I'm afraid that, we may end up losing 30 to 40% of our restaurants in this country, especially if there isn't a more substantial relief package coming for them. My hope is that a small portion of that, at least, was people who have been struggling for the last handful of years and because of their ego didn't want to retire, and this will help kind of move them out of the misery they've been in. But what I'm finding is that, the people that can get lean and batten down the hatches and pivot as quickly as possible to, I've got restaurants that are doing grocery delivery and doing curbside pickup and cocktails to go. I've got catering companies who obviously aren't catering large events, who really quickly switch to, well, can we do meal prep? And can we do, go after what HelloFresh and some of these other companies are doing? So a lot of people just trying to, get as lean and as tight as they can and try to make whatever money that they can. Is kind of what I've been seeing.
Yeah, so kind of feeding off of a couple things Kevin noted. One thing I think that anytime you hit a crisis, the places that weren't operating as well as possible are going to be more at risk. It's just part of it. But in this one, I would argue even those that are running really well, it's tough, right? So I still own a restaurant and bar back in Springfield, Missouri. And so we were mostly bar, about 85% liquor. And so what happens is, yes, we've got people coming in to eat, but you can't do the bar side of it. And so we were seeing businesses that are running. So I think the numbers Bill noted at the beginning, that 56%, you have to take into account that includes restaurants. So you've got, In-N-Out Burger is doing just fine. But that means that sit-down restaurants are probably running 25, 30% of what they did pre-COVID. And it's just challenging. Part of it is getting as lean as possible. But I found for the most part, restaurants are pretty good if they're operating well, of being able to cut down labor and product costs, but you can only do so much with your rent and those kind of things. So unless there's some sort of way to alleviate that burden of those fixed costs, it's just going to be challenging. I think we're going to lose an awful lot of places. It does open the door. This isn't very heartening for those in the restaurant business, but it does open the door for a lot of other people that have been wanting to get into the business. So those of you that are, chambers of commerce and city folks, encouraging others to be able to kind of come in and either help out or join or open their own places. I think we'll see a big kind of flipping of businesses in the next couple of years. But yeah, it's going to be tough until we can let people in, and more importantly, the people are comfortable going in. I think Santa Barbara, I just heard today, is looking at going back to dining outside only.
And one extra point to touch on what you said about rent there, Eric, is I have a big concern that this rent forbearance that a lot of these operators have been getting is going to be a tidal wave that is going to wipe them out, because maybe you weren't paying $5,000 a month, but it's been 6 months or 8 months, and now you owe 50 grand
Exactly.
when you haven't been operating at capacity. So I have clients of mine that I'm saying, go talk to your landlord. You have to have the conversation. It's not in their best interest for you to leave.
Yeah.
But how much time's left on your lease? You know, I got a client here that has a 6,000 square foot restaurant and banquet hall, and she's been there for 30 years. Their lease is up in February. I said, let's talk to the landlord and say, hey, I'll pay you 50% rent and I'll go month to month with a 90-day out, and let's move forward with that. You got to save that cost. And you just have to have the conversation. The forbearance, I'm afraid, yeah, it keeps you from getting evicted, but it doesn't help you. You know, that money's not going away. So if you can either get an agreed reduction in rent, I got a client there in Santa Barbara that their landlord, you know, realized that, hey, we're going to go ahead and give you a month's free rent, and we're going to negotiate decreased rent for the foreseeable future moving forward. So.
Yeah, and I think that's probably my biggest advice to any of the restaurateurs I've talked to is reach out and see what you can do about getting your fixed cost down. It's not in property owner's best interest to have you close down, especially recognizing that lease rates for restaurants are going to have to go down because demand is going to be reduced. It's going to be a buyer's market. There's going to be a lot of empty spaces, and so lease rates are going to come down anyways. And so being able to negotiate with the almost fixed costs, I think, is a vital step to try to get through this.
Yeah, so both of you had mentioned, right, in and out, the large chains, especially with the drive-throughs, are actually, you know, many of the tier 1 chains have been doing very well.
Yeah.
Everybody is tired of eating from home, tired of not only the same meals, but having to prepare for those meals. Everyone's loved their restaurants and want to go out, but then, you know, there are obviously safety reasons. So they ended up going to the drive-throughs. So these restaurants with the drive-throughs, with the curbside pickups, they're doing quite well. But what about the independent standalone restaurants, right? Those that have, I guess with the PPP funding, they survive through, I guess, the first 9-10 months of the year. And now winter is coming. I don't want to be a pessimist. Winter is coming. We may see phase 2. Actually, according to some experts, we're still in phase 1. We haven't even gotten out of phase 1 yet. And then with the combination with the flu, it could get even more disastrous, especially for indoor dining restaurants and the independent standalone restaurants. What are your recommendations for these type of restaurants?
Do you mind if I start this one, then let you follow up?
Sure, of course.
Cool. So a couple things. One, and I think to your point, the independent restaurants have a bigger challenge. In part, I mean, they don't have drive-throughs. And a lot of them have taken advantage of things like Uber Eats. I think Uber Eats did like 190% of their sales this year than they did last year. So I mean, Uber Eats and Grubhub and them are killing it. But the problem is the expense that those put on restaurants is intense. It's up to 30%. And when restaurants are running at a 10% profit margin, I'm losing, that you do the math, it ain't good. Right. And so for restaurants to really look at ways to take advantage of that. So yes, we can do some outside seating. As I said, I think there's going to be a lot of counties looking at shutting down inside again soon as cases continue to ramp up. But what are some other things we can do? We can do packaged meals. We can do curbside pickup, and a lot of POS systems have got integrations you can put in that make online ordering easier. You can work with Grubhub and Uber Eats and those, and just up the price for those services so you're still getting your profit margin. Just looking for any opportunities to increase sales is really going to be it. And then just getting as lean as possible internally. But it's unless there's some help, it's going to be challenging. And PPP and EIDL only go so far. As I said, I got an EIDL loan, and we're scratching the bottom of that barrel right now because we're running 25% of my business is running 25% of what we did pre-COVID. And you can only do that so long before you're, kind of run through that money.
Right. I'm afraid with the PPP that the messaging was off in the beginning, or actually the program changed a couple times. But originally the people that got it were under the impression they had to spend it in 8 weeks. And they were basically rushing to spend that money so that they would get forgiveness on it. And I was trying to tell everybody, listen, don't rush to spend the money. It's a 1% loan. If you're not forgiven on it, at least keep it as a 1% loan. Let's move forward. The idle's at 3.75 or something. But we had a lot of operators that got that influx of cash, had a bunch of employees standing around because they were at 25% capacity or something, because they were worried about their full-time equivalent employees being back to the level it needed to be forgiven. So now they blew through all the money that they were supposed to, survive. And, I'm concerned about that. Yeah. The point about the national chains, what's interesting to see is they're shedding their less performing operation. They're shutting down hundreds of locations across the country, where it's just they're leaving markets because they're like, it's just not working. It's an opportunity to shut them down and get them out of there. The one upside that I am seeing with independents, in the same way that I think about when I am going to go out to eat, I try to spend the money at the more independent restaurant than I do at the national chain. So if I'm going to get, for instance, if I'm going to go, get Italian beef, instead of going to Portillo's, which sold for $1 billion and has 50 locations, I like Tommy's. They've only got a dozen locations. They're a little more local. So I'm spending my money with them. So there is a bit of that feeling there. But back to what Eric said, it's about customer perception. So you have to have signage up. You have to be showing your customers that you care about their health. If you're using pens, you have a discard pen. So every time it's a single-use pen, you're wiping down the doors. Everybody's wearing masks. Everybody's social distancing. If you're not following those guidelines, it's the same way in normal times. If someone walks into your restaurant and the bathroom is dirty, they automatically relate that to the kitchen being dirty and they leave. So in the time of COVID, you have to make sure that your customers feel like you're taking care of them. That being said, I've heard a couple of my colleagues say this, and I agree that in COVID times, the mentality that the customer is always right is no longer the case. If you're open and operating, your number one priority is your staff and their safety. So you have to make sure that they are not getting sick. We had a local restaurant here that posted on the Facebook page of the town saying that we're not going to shut down because we can't survive without it. They've been around for 30 years. 3 days later, they posted that they were closing because they had an outbreak amongst their employees of COVID-19. So, that restaurant, as far as I'm concerned, is done. You're never going to get that back from that public perception, right? So it's so important that we take care of our employees at this time.
Great. So we talked about a couple of top challenges faced by restaurants during the pandemic. Talked about the ability to manage fixed costs, to make sure those are well managed and be able to really squeeze by, right? And see if we can squeeze by as long as we can until we get a vaccine and until the current situation changes, as well as taking care of our employees. It's that work relationship that's going to make a big deal to make sure that the work staff is happy. So they're there to be able to be creative and think about how to take care of their customers. They got to be happy in order to have happy customers. What are some other top challenges faced by restaurants during COVID? Obviously, we can think of the safety procedures necessary. If restaurants do have that dine out opportunity, what are some other things that we should be thinking about as it relates to restaurants?
So in operations, we talked about fixed costs and we talked about being lean, but really talking about what some things you can do. So one of the things key is really taking a look at, so one of the big risks of having a heavy decrease in sales is increased loss, right? That you're not going through the product, so it's going bad, or you can't, your costs are going up because you're ordering smaller portions. So I think most restaurants I've worked with, I've talked about reducing your menu, looking and see what are those kind of key items you can drop it down, especially if you've got some ingredients you're using across items, to really get that menu down as simple as possible. That you're still meeting the needs of your customer, but you're not trying to do this whole big thing and you've got a bunch of product going to waste. So just some simple things like that can be really useful. And then really it's a matter of, Kevin emphasized this, can't emphasize this enough. just making things clean and communicating really clearly what you're doing and when you're doing it and how you're doing it. The communication to your staff and to your customers is really vital. And there's, kind of this trick. You don't want to like give them all the information. You want to give them enough. And then, but the big key is be transparent. Say, if you have questions, let me know and we'll get back to you. And just respond really openly and honestly. It is really kind of key.
Absolutely. And what Eric said, if my restaurateurs that have a point of sale system, I say, go run a 90-day report from December, January, February, and run the last 90 days. Let's see what's selling. Show me what your 10 to 15 most selling items are. And then let's streamline the menu down to that. Now let's do the cost of goods on those items, because so many of my operators don't do that. Tell me exactly what it costs to make that plate. I want to see that. If you're quick service, I want that cost 25% or less. If you're full service, I want it to be 30% or less. And often operators will say, well, I'm using the same protein. It's basically the same meal. So why can't I have it on the menu? But it's the cheesecake mentality, right? If you're in reduced dining and say you can only be 25 or 50% of your seating capacity in your dining room, right? You got to worry about your table turn. If every one of your customers sits down and gets an 8-page menu and it takes them 4 to 5 minutes on average to pick what they want, when everybody's still picking the same 10 or 12 items, they just had to read all the pages of it. What does that do to your table turn? 5 minutes a table every day. How many tables are you seating? Boom. By the end of the day, you could have sat 10 or 20% more of your customers by being able to do that. And operators don't think about that. They think, hey, it's chicken. We can put tomato sauce on it, or we can put salt and pepper on it. It's the same thing. But by having too many choices, it just slows down your customer. And going away, if you can, touching on technology, if you can get a QR code and have the actual laminated on the table and have people scan it with their phone and look on their phone, people don't want to be messing with menus right now if you can. And talking to your point of sale companies about, what are they doing for pay at table or different options? I know Square and a lot of those pivoted very quickly and ramped up to make sure that they had those kind of technologies available.
Yeah, I'm glad you mentioned the food cost component. That's one thing I think people forget, especially looking at beef price. Beef prices have skyrocketed, right? So like we did in my restaurant back in Missouri, one of our top sellers is our tri-tip sandwich, which I totally stole from Santa Barbara restaurants and took back to the Midwest. But it kills, right? We sell tons of it. But I had my kitchen manager. I was like, let's double check. Let's price everything out that we're doing and see. And we realized with the increase in the price of beef, we weren't making any money on it. So really, especially this time where prices are fluctuating so much, really paying attention to, all right, these are my kind of top selling items, but right, am I getting the money I need to out of them?
Thank you. We talked about narrowing menu items, right? Simplifying your menu and your choices for customers to make easier, faster decisions. We talked about adding curbside, adding other channels for customers to access, obviously the restaurant goods. What are some of the other ways that restaurants and bars are shifting their business models? It could be structure related, right? We talked about delivery and as well as menu selection. What about some of the other ways that they're doing to meet the current environment that we're in, but also that this is continuing evolving? What do they need to do to stay nimble and be able to pivot quickly?
Right. I think back to the point of sale. If you're using a point of sale, it's great because you can get a lot of analytics out of it, right? But looking at your hours of operation, years ago, I used to run a restaurant on the Santa Monica Pier, and we would open every day at like 11:30 for lunch. And I ran a half-hour item report, and I realized that the majority of my customers were coming in at 11:45, 11:50, right under noon. And it was still showing in that 11 to 12 time. So we decided to open at noon. By cutting 30 minutes off, I had 15 employees on the clock at $6 an hour. What is that? Or not $6. That 30 minutes cost me $6 a person. That's $120 a day I saved by opening 30 minutes later. So I've seen a lot of restaurants out here that have pivoted to, hey, we're only doing dinner pickup from 4 to 8 p.m. We're not doing lunch, or we're going to do, so you can try to run it with less of a crew, and go with one shift instead of two shifts if possible. And, I always say these are just ideas. Every operator knows their business better than anybody else. So that's why I like to have these one-on-one conversations with people to say, would this work? Does that work? Tell me this. Well, I'm a breakfast place. Okay, well, it doesn't make sense, that kind of thing. So, but these are the questions you need to ask yourself. Do we have to be open from 10 a.m. to 10 p.m.? Or is everybody coming in from 6 to 8 and from noon to 2? So let's try to cut that labor cost down as well.
Yeah, I'd say that's one of the biggest things is really being data driven is really going to be in these times that we're seeing such a decrease in traffic. Really making data-based decisions is going to be important. So looking at your numbers, not what do you, I think obviously if you're a breakfast place, thinking about what do we need to do, but looking at the times people come in, looking at the cost of things, looking at what you're selling and what you're not selling, and actually using the data to drive decisions is really going to help you find ways to trim down.
Great. We talked about using data, right, to drive decisions, because every business is unique. So that data is going to tell you and give you direction on where you want to focus and prioritize going forward. Earlier, we talked about, the consideration of third-party delivery platforms for those restaurants that are currently using third-party delivery, as well as those that are considering use third-party delivery. In addition to we lightly touched on the cost of third-party delivery taking up 30% of total sales. The Uber Eats, the Grubhubs, and the DoorDashes. What are some of the other things and factors to seriously consider by adding? Obviously, adding those channels will boost sales, but obviously also drain the bottom line. What does that decision-making process involve? For our restaurateurs.
Right. So like Eric touched on with the third-party delivery, my fear is that when they came onto the scene a couple years ago, the operators who didn't have a strong understanding of what their cost of goods was agreed to give them 30% of a check, which is, I always tell people, like, listen, if that's a customer acquisition cost, the first time that customer went to their website, because Uber Eats has a huge media reach, right? So if they go to the website and they want, Thai food, and they find your Thai restaurant and they order through them and get delivery from you and they love it, that's great. That's a customer acquisition cost. Now, but the next time you need to make sure that you have technology in place and incentivize them to order directly from you. Mm-hmm. There was this kind of cloak of what these delivery companies were doing. And I think the consumers were under the impression like, oh, well, I'm taking care of mom and pop. No, you're taking care of Uber Eats, and mom and pop is being crushed. So here in Illinois, actually, the mayor in Chicago was pushing for having to put on the receipt the cut that the Grubhub was taking, so that everybody could very clearly say, wait a minute, they're taking this $100 bill, they're getting $30 from this restaurant. Does that seem fair? So again, if it's a customer acquisition cost and the first time that customer was never going to find you and they found you because of that, but you have to incentivize them. And like Eric had said, having higher pricing on those platforms and incentivizing people and pushing out on your social media, hey, order directly from our, from Squarespace or Harbor, whoever you're using for your point of sale system. Obviously, this isn't the time to go out and be shopping around, but talk to the operators or the systems that you have and find out what they're doing for online ordering and being able to get the customers, once they're acquired by you, to be able to reorder directly from your site. So you're cutting out that 30%.
Yeah, no, I'd support that. But actually, one kind of sideline, I would generally argue that this isn't a time to shop around, but we actually did because we were already using Upserve for our credit card processing, and reach out to them, and they ended up saving us. We were using PosiTouch, which is an old kind of older style POS, and we were able to save like $300 a month on our service by switching to Upserve's POS system. So it not necessarily, you still like, again, looking for any ways you can shave dollars off is vital. So reach out to your POS system, see if there's, especially if you're using one of those old clunky ones, if you're using an old school Squirrel or, PosiTouch or, any of those, seeing if there's some modern ones that might be able to save you some money without having to put much money up might be useful.
Absolutely. I talked for a client of mine here that was just using a register, and we were looking at point of sale options, and I talked to Square and I talked to Harbor Touch. So Square, was offering like 2.3% on credit cards. Harbor Touch was offering 2.9, but Harbor Touch was $39 a month and a $500 sign-on bonus for a 1-year contract. Well, that's a free point of sale system.
Yeah.
And they said, well, we're 2.9. I said, Square said 2.3. They said, we'll match that. So again, it's having that conversation and then keeping them honest. So, if you're going back to your credit card processor and tell them, hey, I want a rate review. I want to see, where we're at, because it's the kind of thing, if you haven't been checking in with them every 6 months or every year, they've been raising your rates and charging you exchange fees and a little bit here, a little bit there. So same thing with your purveyors, talking to Cisco and US Food Service and them. I was on a webinar, listened to the owner of Maria's Italian Kitchen, and she said flat out, she went to Cisco and said, listen, we're going to pay you what we can pay you on a monthly basis. We want to work with you, but I can't just pay all these bills up front. We'll be out of business. And then where is Cisco? I mean, obviously 12 locations of Maria's Italian Kitchen makes a lot of sense to have that kind of leverage, but back to just having the conversation, reaching out to people and say, hey, what can you do for me now? We're all in this situation. Let's figure out a way that we can all, be profitable coming out.
Yeah, do that with all your recurring. I normally say, anytime I talk to restaurants, I'm like, focus on your big costs first, right? Your labor and food and liquor costs. But then, especially in times like this, looking for any way you can shave off. So get new bids on all of your insurance. I almost guarantee you, if you haven't rebid your insurance in a couple of years, you're overpaying. All of those things, just renegotiate. Now's the time to do it.
Absolutely. And get on terms. I mean, with Cisco, my client out here, she's on 7 days. Yeah. And I'm like, well, Cisco does 30 days. You've been with them for 15 years. Why don't you ask if you can have 30 days? And the sales rep was like, well, they need to know why. Well, because it's better for your business model to pay on 30 days as to pay on 7 days. So if they say no, then they can say no, but at least ask the question, right? Yeah.
Thank you both. I know in the midst of the conversation, we had a question submitted by Amanda from the audience. Paul, do we want to unmute Amanda for her to ask her question?
She says we actually already answered it, but Amanda, if you'd like to follow up with anything.
Hi, sorry, I'm in my office right now. But yeah, so we're not necessarily a restaurant, so we're a meal delivery service, but we have a commercial kitchen and we do meal delivery. And we've at one point used Uber Eats, or no, I think it was Grubhub, and we just noticed a huge chunk of our profit being taken away. And so we decided to use in-house delivery. So we have 2 drivers that do delivery. And I guess I still have to kind of do the work of if we're making a profit on that or not. But I don't know if you guys have experience with in-house delivery. I know obviously, I think you have experience with the Grubhub and Uber Eats, but what your thoughts, I guess, on in-house delivery would be.
So yeah, I was with the client.
Sorry, go ahead. Sorry.
I was going to say, I was with a client of mine this morning. She's actually a vegan co-packer here in Chicago area. And she does meal prep and also sells to Whole Foods and locally. And they have their own van and their own driver. What they've done is they've limited down the number of days that they deliver. So, one of her clients who's working out of her co-packing kitchen is a meal delivery service that delivers 1 day a week. So everybody orders by Wednesday. So she has 1 day where that truck is full and it's running around all day, but maybe she's paying that driver $10-15 an hour plus the insurance or whatever, but she's getting it done in that frame of time. Now, I don't know if your model would stand for that, if your customers would take that. But that's one way to limit down the window again of when you are delivering.
Yeah, and that's really key. Again, it goes back to data, right? So I've done delivery a couple different times for some of them in different restaurants. Once it was great. We had enough business that the delivery person was consistently working. The other one, we found that it really wasn't paying off, that we just weren't using the person enough. And so in those situations, if you've got somebody that can do something else when they're in house, and then they're available for deliveries, that's fine. If you can find ways to kind of focus the delivery window, that works. Just making sure that you don't have dead labor just sitting there doing nothing is really going to be kind of key. And that you think about, right? You think about the cost of that delivery as a component of the cost of the product, right? So when you're figuring your food cost, it's cost of goods. What's your cost of goods? Well, part of that cost of goods for you in that situation is going to be the delivery. And so are you still above break even financially on it with that cost brought in? That's, I think, an important part to be thinking about.
Right. And part of the negotiating, is talk to Uber Eats, talk to Postmates, talk to Grubhub. Hey, you want 30? I'll give you 15. You want 20? Or, I've got clients here that they're working with a smaller, husband and wife team that are, covering just an area, but they're charging 10%. So I'm like, okay, well, for 10%, maybe it makes sense to not pay my own drivers and pay more insurance and have to worry about that, as long as the service is still being delivered. Though, they're going from point A to delivery as opposed to hitting a bunch of different places. But as far as, delivery, you can find, Bill's bike guy who's going to run the delivery for you if you need to be. Uber Eats and DoorDash, the value of them is that they're driving customers to you because they have 100 million users or whatever they have worldwide. So that's the marketing aspect of that. So, but as far as you already have the customer and you're just trying to get it to them as fast as or as easily as possible, I would, look at the hours that you're delivering and also look at, is there somebody cheaper in the area that'll do it for you?
Yeah.
Thank you. That answered my question. Very helpful.
I believe Alejandro from the audience also had a question. Paul, did you wanted to also, well, Alejandro, are you there? I guess I can talk to him too.
Yeah, I'm here.
Oh,
Listening.
perfect. Yes. The line's open for you to ask your question.
Cool. See, I sent my questions to Paul, so I'm trying to remember what exactly I asked. But my perspective is as a kind of a community member who's also a researcher. I'm a graduate student who works with restaurant workers. So obviously my perspective is from the workers' perspective. And my focus empirically is in the San Gabriel Valley. So I'm asking, I guess, two questions. The first one, what have been programs in the San Gabriel Valley that have helped workers, specifically like the most precarious workers in this industry? I know the CARES Act has been something that's implemented, and the Angelino card, and I was wondering if there's other things that were out there. And secondly, I'm thinking about the San Gabriel Valley specifically. This is for my work that I think is very attractive because of its culinary authenticity, right? But we're also living in a context where there's like xenophobia specifically against China. And I was wondering how these factors are impacting this area, if they are at all, and if there's a discrepancy between how the San Gabriel Valley is being fit in comparison to, let's say, down LA. So these are the questions that I am, I guess, proposing. Thank you.
Well, Eric, you're more California based now. You want to start off on that one?
Yeah, so San Gabriel specific, I really don't know. I mean, as far as the CARES Act and at the national level for help for those for workers, and it's one of the things that is hard for me as an owner as well, is they're in it. It's not there anymore, right? That I really feel like our federal government has really failed on this. That the initial help was huge and got a lot of people through the summer, but this idea that food workers are no longer able to get really anything above the base level unemployment, which just flat out isn't enough, especially in California. In California, I don't know how people are making it, to be honest. So I don't know much, and by all indications, it's at a standstill at the national level and probably will be until after my guess is after the 20th of January at the very least. But is there anybody, there may be someone else in the group, Paul, that could answer the more specific to San Gabriel Valley?
That's actually,
Yeah.
I just threw that out in the chat. We've got people here from cities and from chambers who might have that specific information. If anybody wants to volunteer, let me know. And
Hey, Paul.
yes, sir.
Yeah, I mean, our numbers in the SGV, I mentioned the county's down 56%, which from just the SGV, that equates to just over 39,000 workers. And we haven't seen any specific programs geared towards the workforce as much as the business. And at first, as we heard, there were a lot of loans being offered and a lot of people jumped on that. But the last thing many of these businesses need are a loan. And so we're starting to see more grants now. And so I think from the business perspective, you're seeing that, and that relates down to the workforce that if those businesses can stay open and keep people employed, that's going to help the workforce certainly. But there hasn't really been anything outside of state related assistance if you're not working for workers in a specific business sector. On the other part of your question about maybe the Chinese market, Asian market being sort of blackballed, it sounded like, or targeted, as far as people not wanting to visit, we haven't really seen that. I mean, that hasn't been something that we've seen. I see we have Chin on the phone today, and his city has a lot of Asian restaurants. And Chin, would that be something you'd be willing to weigh in on? Because we haven't seen it as far as a regional basis.
Hello, hi everyone. I'm the Vice Mayor of St. Gabriel, and St. Gabriel has more than 200 Chinese restaurants. So, yeah, we're very engaged with our restaurant owners. Especially, we have a $2,500 small business grant, and for some, and I noticed some of the business, very busy. I can tell you, people wait in line, and some of the large ones that might have a problem because one of the restaurants can hold 1,000 people every day, and it's just that relied on takeout because they don't have the outdoor space, so they just relied on takeout. And one thing that I heard about the people working in restaurants, sort of in the beginning of the pandemic, and when they a lot of these people, they don't want to come to work, and they relied on the unemployment checks and that kind of stuff. And so the big restaurant had problem getting the help, and the small restaurants in the other way, it's not, because it's pretty much family operated situation. So they don't rely on outside labor. And right now, I think it's slowly getting to normal. We opened up for outdoor dining. We, as a matter of fact, I did not, in the beginning we thought, our restaurant business is going to be in terrible situation because we're going to be suffer and xenophobia and all that. But no. Fortunately, I would say fortunately, we're still doing business, and we're, of course, most of them, they say, we prefer dine-in, services, but right now it's just outdoors. So, and we're losing some of the sales tax. However, the other side is, we passed it's called the sales measure, and we increase a little bit, because the business is down. The serious impact, I would say, is the hotel business. Some of our hotels is to have like 95% occupancy rate. Right now, I'm looking at maybe 15. So it is a huge impact, and they have to keep their employees on board. Every month because one of the hotels paid like $500,000 for staff salary. So it's not easy. But anyway, hopefully by beginning of next year, we'll go back to normal. That's what we're hoping for. But as a matter of fact, yeah, we have our own delivery services, through the Chinese or Asians company, and they can do a cheaper rate, than the big company. So maybe that's the way for them to survive. So this is the situation in St. Gabriel. Thank you.
Thanks, Jen.
Yeah, thank you to both of y'all. I'm looking at the West San Gabriel Valley, so that was very helpful.
Thank you. That was a great local update. We touched on workforce. This is a really important topic. The restaurant industry employs over 16 million people. That's about 7% of the total employment in the country. Obviously, many of those work staff has been laid off as restaurants were forced to close or have to adjust their employment schedules during these tough times. What are some key considerations from a staffing standpoint, whether it's safety, capacity, control standpoints?
So safety, I think, needs to be and I think we both hit on this a bit. Safety needs to be forefront. Well, certainly if you have somebody get sick, it's going to send a bad message to the public, especially if you don't handle it well, right? So it's all about safety and then communicating about that. So I can think of actually a friend of mine's restaurant in Springfield, Missouri. They had somebody test positive. They immediately shut down. They sent information out to everybody that we're going to be closed 2 weeks. We had somebody sick. Here's the steps we're going to take. Here's what we're doing. And they were able to come back to that from that really positively. On the other hand, we had somebody that the social media released, hey, somebody was sick there, and they're having now customers just really lambasted them. So really it's a matter of keeping our employees safe, both for terms of image, but also just for our employees, right? I think I had one of my employees posted this idea that customers don't think of them. Why do I have to wear a mask? I'm the only one here, is what somebody said. And so I think making people realize that our employees are people and making sure that we're keeping them protected, and that we don't just think of them as a cog in the machine, that we think of them as humans that are at risk and taking steps to make sure that they're safe and taken care of. They're coming out of that. One of the things that research shows on the idea of how businesses handle crisis, that businesses that show leadership, that communicate freely and openly, that take care of the staff, that do those kind of things during crisis, are going to come out of it with a substantially better reputation than they did going into it. So it's a really important thing for us to think about as owners and managers and leaders of our organizations, whether it's restaurants or any, right? That if we're open and honest and we deal with it and keep our calm, we're going to come out of it more successfully. And even those employees that we, as long as we tell them, we're open and honest about why we're not bringing them back, why we can't, that when we do open, we're more likely to be able to bring those people back in. And also recognize that, when we tell people, I'm sorry, I don't have a place for you, if we can find any way to support them, even if it's not something we can do, but making sure, so when I laid off my team, I was like, all right, so here's what's going on. Here's the link to file for unemployment. Here is a link to support from nonprofits for restaurant workers. Here's a link to get food stamps, and making sure that you're giving them what information and you're finding any way you can control it is going to make it more positively coming out of it, and it's going to help take care of them as well.
Absolutely. And on the operator side, as we've been looking to have to downsize, I've been telling people, let's make sure that we're downsizing the hardest positions to fill first. I've seen restaurant chains that you know, the general manager and the floor manager are the two people that are working the restaurant, because those are the two hardest positions to get back and get someone trained and ready to do that again when we are up and running, right? So, you know, you have to lay off, unfortunately, the more hourly and earlier or later joined people on the team. You know, back to a little bit of the CARES Act, and I do hope that they, you know, get to a second round of this. Everybody was complaining about the $600 a week that restaurant workers were making, which, you know, one, it basically gave them a living wage. But, you know, it was harder to get people to come back to work. But what everybody is so short-sighted about is that $600 that those people were making, they were then putting into the economy. They were going out and paying their bills and buying groceries and going out to restaurants and doing the things that we need to make the economy stronger, right? So the idea of let's get the money into the hands of the people, instead of giving Morton Steakhouse $50 billion. Not to throw Morton's under the bus, they gave the money back, but the point was, you know, let's get this down to the street where it needs to be, right?
Right. It's the CARES Act is really intended for small, medium-sized businesses that are highly impacted by COVID. So I think the Mortons, where they have multiple sources of a cash flow, might not be the one standing in line with these type of needs. Paul, I know that another question came in during our conversation. The line's open, correct? For that individual to ask the question.
He's actually at the office without a microphone, so he asked if I could read it for him, if that's all right.
Absolutely.
This is from Tim Schwer, who works for the city of Arcadia. He's a good colleague of ours. And Tim says, post-COVID-19, let's see, let me see if I can say his question. Post-COVID-19 fears of future pandemics, post-COVID-19, is the fear of future pandemics going to negatively impact investment in restaurants, restaurant operators' ability to access capital, new openings, etc.?
So as far as, I think there's several pieces of this, right? So investment in new restaurants, I think is probably going to, as I noted, you know, it sucks. A lot of people are going to lose their restaurants, but it's not like those spaces are going to lie empty. There's an awful lot of people in the world that want to open restaurants, that this is going to give an opportunity for them to step in and do it. Now, as far as from banks' perspective, actually, Nancy may be able to answer this better than us. You know, I think that sure, the risk may be increased a little bit, but it's not like banks looked at restaurants, went, we're going to throw money at you. It's already was a high threshold of because the failure rate is so high, that I would imagine that there's not going to be a whole lot of change there. You know, you still need to have quite a bit of your own money to put in. You still need to be, you know, mitigate risks for lenders as much as possible. But I don't see a long-term decrease in the number of restaurants. I just see it's going to be a shift in kind of ownership of them.
Right. And I think, you know, yeah, banks aren't lending money on restaurants. It's just not going to be anywhere in the near foreseeable future, anything that I'm seeing. So people that I'm working with on business plans on stuff, I'm like, listen, this is going to have to be funded by friends and family. So let's start looking at, you know, investment opportunities for people to come in and be a part of what you're doing, who believe in your vision and are part of that. So yeah, are people worried that there could be another global pandemic? I think that, you know, the important part to think about this is that, unfortunately, if we're going to lose 30% of our restaurants, we're going to eventually get back to 100% of the people wanting to be going out. Now they're going to have 30% fewer choices. But to Eric's point, I think that in the spring, we are going to see that there's an opportunity for people to come in and snatch up these places. You know, I had a client here that was going into a pea pod space, my vegan co-packer. You know, it's a 6,000 square foot space. And we were there with the leasing agent. And I said, you know, she's interested in the 3,000 square foot that has the line and the walk-in and the freezer. She doesn't need all these cold rooms yet. And he's like, oh, no, the landlord doesn't want to subdivide. I said, that's fine. But in COVID, she's interested in these 3,000 square feet. So she moved in November 1st at less than half to what the rent was. And she's got a deal with that now moving forward to where, you know, she has 120 days first right of refusal on the other half, or if somebody comes in, they're going to let her know. But landlords are going to want cash in hand. So there's going to be an opportunity for people to step into those spaces. So if you're looking at your business plan and you were costing $3, $4, $5 a square foot, maybe you can figure $2 a square foot, whatever. So that back to the fixed costs that Eric keeps talking about. Rent is a big one. It's got to be 10% or less of what your sales are. So it gives you an opportunity to negotiate.
It's commercial real estate people that I'm really worried about. They're the ones that are going to have a hard time.
It's funny, back in March when I was fielding all these calls, one of them was a commercial real estate company here. They have 2 million square feet of commercial real estate. And I'm like, you're the landlord. What are you calling for? And he goes, I've got West Marine and AutoZone calling me and telling me they're not paying rent.
Yeah.
I think Cheesecake Factory told all their landlords they're not paying rent for the next year. You have any idea what a Cheesecake Factory goes for on a monthly basis? But they're just like, hey, we can't do it. So evict us. What are you going to do? Right?
Yeah. And all the other ones that are like, we're just going to have our people work from home. So I need 10% of the space. Yeah.
Exactly. That's going to be an interesting impact. My wife's a real estate broker. And I think that because as companies are realizing it does work, people being from home, and we can now, instead of being in Silicon Valley, we can have people living wherever. And, so I think it's really making a change in where people are buying homes and moving.
Yep.
I want to just share a perspective on the Bank of America's viewpoint on
Sorry,
I would say, there's never yes, we don't lend to restaurants, period. I think everything depends, right? For those restaurants that have the liquidity, we're doing well pre-COVID and has slowly turned the corner. We will look at them and look at what their needs are. And many of them, what we've seen, many of the needs have been more on the equipment side, whether it's like you talked about cold storage or kitchen equipment or whatever some of the equipment that they're thinking about automating some of their processes and procedures. We're seeing some of that come in. What we are seeing a lot from our restaurant clients who hold their depository accounts with us is that the bank, we're proactive reaching out to look at how we are able to help restructure if it requires a restructuring of their accounts, look at unnecessary services that they currently have, see if we can consolidate and simplify these type of structures that really cost unnecessarily money, right? All of that adds to the bottom line. And then also look at ways of automating some of the services, whether it's accounting or banking services that honestly will require a lot of labor costs, but now can be replaced by automation. We have very, very robust bank platforms that allows on real-time reporting of information for reconciliation purposes, but primarily for businesses that are looking to automate some of their processes as they think about how they come out of COVID, right? We have a lot of recommendations for that. Any final comments? I guess we're wow, the time flew by. We're already at 1:04, top of the hour. Any final comments, Eric and Kevin, for our audience here today?
Yeah, I encourage people to check out the SBDC. Our services are free to you. And I have so many operators that I work with, one, getting your place open, but also checking in on a monthly or quarterly basis, just to have somebody to spitball ideas with, so you can check out, the SBDC in Ventura, EDC SBDC, or I also work for College of the Canyons, but SBDC. And, our services are completely free to you. You just have to, we're judged on milestones. So it's, the idea that if businesses are doing well, communities are doing well. You're hiring local, there's capital infusion, there's tax revenue. So, Eric and I are paid for our time, but, the services are free to use. So when I found them in 2012, I was amazed. I'm like, you mean this restaurant advising is free? And they're like, yeah. So check us out and book time with us. Our calendars are up there, and I have people that jump on and meet with me all the time.
And it is an SBA funded program, so you're just getting some of your tax dollars back.
Yes.
Yeah, and I just say, recognize in this time, one of the biggest challenges for everybody is figuring out what we're going to do. And it's easy to focus on things outside of our control because so many things are right now, but there's nothing you can do about those things. So instead, I always think it's important to just take a step back and go, all right, but what can I control? What can I do? And look for those opportunities of action and focus on those. It'll give you a little bit more sense of control, a little more sense of autonomy, and it will help you move forward.
Thank you, Kevin.
Absolutely.
Oh, thank you both very much. We had a very short hour. There were quite a few other questions I know would be very interesting to the greater audience, like marketing, right? How do you reach out to your customers and talk about communication? How do we get them comfortable, to come to still frequent the restaurants, as well as social media? How do you use social media as well as collaboration with partnerships to help grow your business top line? So all of those things that we talked about, reaching out to Kevin and Eric for their expertise, but as well as utilizing small business, administration for their resources. I do want to thank everyone attending this call today. I want to thank San Gabriel Valley Economic Partnership for hosting the event with our esteemed guest speakers and providing their insights. And we hope these insights help you navigate through these very challenging times. As a Bank of America team member, I believe that we must continue to share, collaborate, and partner together to sustain our community and help it thrive. And we have resources and also thought leadership that serve as a connector to subject matter experts within many industry verticals, including restaurants. So please let me know how we can help and partner with you to help your organization's banking needs. Bill, do I turn it back to you to
Sure.
close our event?
Thank you, Nancy. Thank you very much. And thank you, Kevin. And thank you, Eric. It sounds like, based on the feedback we got today, we will have to have you all back. And so, yeah, I think we're in this for a little bit longer, as you both know, certainly. And thank you to Bank of America for always doing our PowerLunch sponsoring of these events. We're looking forward to being back in person again so we can see everybody. And thank you to everybody on the line for taking time to join us. We do have our gala that I will mention that's coming up. It's next Tuesday, the 17th, and the networking reception starts at 12:30. It's our first virtual gala that we'll be doing. And Paul's done a great job setting everything up, and it should be a great program. If you have time to join, I would encourage you to. And I hope everybody has a safe Thanksgiving holiday. And as we approach our holiday season, be safe, enjoy the time with your families if you're able to. And thank you again for your time today.
Thanks so much.
Thank you, everybody. Take care.